Donald Trump's new economic world order is taking shape as his so-called reciprocal tariffs on 60 countries, which the US president calls the worst offenders, have just kicked in. Top of the president's economic hit list is China. Its exporters are now grappling with tariffs of 104% on their goods after Beijing refused to back down from its own retaliatory measures. Other nations with higher tariffs include Japan, who are hit with a 24% levy. India is now dealing with taxes of 27% on its goods, and many other Southeast Asian nations are on the unenviable list. Notably, 49% on Cambodian products. Also, a lot of manufacturing moved from China to Vietnam, and it is now having to pay a tax of 46% on its US imports. President Trump said these tariffs will make the US $2 billion a day. He also acknowledged that his economic strategy had been somewhat explosive and said the White House is in the process of making bespoke deals with countries.
So that whole situation that, it was somewhat explosive, but if we didn't do that, we wouldn't be talking the way we're talking right now. It's been amazing what's happened. Sometimes you have to mix it up a little bit, but we've had great consideration. We've had talks with many countries, over 70. They all want to come in. Our problem is can't see that many that fast. But we don't have to because, as you know, the tariffs are on and the money is pouring in at a level that we've never seen before.
Well, we'll head to Asia shortly to talk to Shaima Khalil in Tokyo, Jonathan Head in Bangkok and Marika Oy in Singapore. But first to Washington and our North America correspondent, Peter Bowes. So, Peter, the tariffs are now in place, the reciprocal tariffs. It was hoped, I'm sure, on the part of many countries that deals could have been done before this moment.
Yes, really, we're seeing now the full force of those tariffs that it's now a week since Donald Trump first announced his plans. The full force of those tariffs around the world, with individual countries, the worst offenders, as the White House has described them, now feeling the weight of those tariffs. And, well, you've mentioned China, that 104% tariff. That's as a result of China not pulling back on its tariffs against the United States in terms of products going to the US. And really, this is what Donald Trump wanted. He's described it as explosive. He says you have to shake it up a little bit. That might be a little bit of an understatement when you gauge the reaction internationally. And increasingly, Sally, the reaction in this country, we're seeing people concerned about everyday products like food, like clothing. Some people are beginning to stockpile those goods in their homes while they can, before they expect the prices to rise in the next few days.
And quite incredible to see the swift movements on Wall Street in every direction, up and down, as traders can't take their eyes off the screen. And, Truth Social and other places where Donald Trump is adding more detail.
Yeah, and I think uncertainty is the word, because we're seeing those wild fluctuations in Wall Street that often just swing on a few words from the White House, or indeed rumours that maybe actually turn out to be wrong but still affect the markets. So I think strong and so significant are the jitters that people are feeling at the moment, that it doesn't take much to make quite significant changes in terms of prices and the sell-off that we've been seeing.
OK, Peter, thank you so much indeed. Let's talk to Shaima Khalil now, who joins us from Tokyo. Shaima, 24% tariffs for Japan, an ally of the US, a very important trading partner. So many goods head to the United States, and it's hoped that Japan could be first in the queue for negotiations.
Yes, Japan will get priority tariff negotiations, according to the U.S. Treasury Secretary. But what that will look like, how that will turn out, nobody really knows. It's still in that uncertain realm, as Peter was speaking there. But I think, look, there's so many stats and numbers that you can throw at this story. But I think here in Tokyo, the sentiment is still one of being stunned, of being shocked. As you say, Sally, Tokyo is a staunch ally in the region, a key economic and security ally of the United States. And unlike Beijing, this is a friendly relationship. Tokyo is a friend, Beijing is a foe. And yet, Japan feels that it has to swallow the bitter pill of the reciprocal tariffs. And there's almost a sentiment of, how could you do this to us? That politically, you can feel it in the air. The Prime Minister, Shigeru Ishiba, said the whole country has to come together in what he described as a national crisis. There's a governmental task force now with thousands of consulting desks and financial institutions fielding calls regarding tariffs. But even though the Prime Minister has called for diplomatic composure, the fact that Tokyo is still very much in tandem with its relationship and committed to the U.S. economy, with a 25% levy on the car industry already in place, the danger is real. The auto industry represents 20% of Japan's exports. That's $17 billion of projected losses if these levies are still in place. The tariff diplomacy is in full force. There are two major developments in the chaos of the last few days. One is that 30-minute phone call between the Prime Minister and Donald Trump on Monday, and that tells you that there is an open channel. And the second one is the appointment of the Economic Minister, Ryosei Akazawa, as the chief tariff negotiator. He will be dealing with the U.S. Treasury Secretary. Look, there's so much that Tokyo can bring to the table. For 5 years running, Japan has been the U.S.'s top investor. There are 54,000 U.S. military personnel here. There's already developing defense agreements between the U.S. And Japan. And so the negotiators have a lot to talk about with the United States. Right. They will get, as you say, a front seat, but it's still a very uphill battle.
Priority boarding, as they say, when you're getting on a plane. Thank you, Shaima. Let's go to Jonathan Head in Bangkok. So, Jonathan, Thailand is on the worst offenders list as well. So what is it facing now? The tariffs have come into effect in the last few minutes. And I have seen the Thai markets being hit hard by all of this as well.
As they are across the region, Sally. I mean, the worst affected country, or the least in terms of the actual scale of the tariffs, is little Cambodia, 49%. I mean, there is simply no hope that Cambodia can buy as much from the US as it sells. That's going to have a devastating effect on its garment industry. Like other countries in this region, the response from Cambodia, from Vietnam as well. Vietnam, US exports to the United States, it's the largest destination, account for 23% of its entire GDP. And Vietnam has very ambitious growth targets for its current economic plans. For Thailand, it's a bit less, about 18% of exports go to the US, but Thailand has a flatlining economy and is desperately looking for all possible ways of getting it going. These tariffs have come at the worst possible moment. Now, the official response from all the governments in this region is don't panic, don't retaliate, as China has done, negotiate. But negotiations, I mean, as you heard from Shaima, Japan's at the head of the line. Thailand's going to send its finance minister. The Vietnamese deputy prime minister's on his way. The Malaysian leader, Anwar Ibrahim, is heading to Washington too. I mean, who will they meet? We heard from Mr. Trump's trade counsellor, Peter Navarro, in interviews given over the last 24 hours, that even though these countries have all offered to reduce their tariffs, Vietnam said, we'll bring our tariffs down to zero. He said that won't matter. He said the fundamental problem is the imbalance in trade. And because these tariffs have been calculated not on the basis of what tariffs are imposed on the US, but on how big the trade deficit is, all of Southeast Asia pretty much has a trade surplus with the US because these are relatively low income, high exporting countries. That's their model. They simply cannot buy as much from the US as they export. And so it doesn't look at the moment, if Mr. Navarro's influence still holds, as though whether it's actually going to be possible for those trade negotiations to actually be able to be successful.
And Jonathan, you mentioned Cambodia and Vietnam as well, in particular, and I noticed a lot of their governments are saying, we're going to buy more US goods. We're looking to see what we can purchase from the US to try and reduce the deficit. But actually, Vietnam, Cambodia in particular, really benefited from the tariffs that Trump put in place in his first term in office back in 2016, because all the manufacturing was moving out of China to other parts of Southeast Asia. And later in this programme, I'll be talking to a company boss who's in Arkansas who has all his goods made in Vietnam. And still those tariffs are much lower than China, aren't they? So you're still better off getting things made in Vietnam than China.
Yeah, I mean, obviously, it's all a question of if you're hit with tariffs, are you going to be worse off than your competitor? And I think that's where, look, Southeast Asian countries are inherently transactional and they are being pragmatic, even though inwardly I think they'll be panicking. There are going to be big impacts on their people's standards of living. I mean, Peter Navarro claimed that 1/3 of Vietnamese exports to the US are actually de facto products diverted into Vietnam from China. That's not actually true. The best studies, and statistics are not good on this, estimate that perhaps 7 to 16% of exports from Vietnam to the US probably are ones that are a result of tariffs in China. But it has played a very big role, and it means that there's real turbulence for supply chains, for manufacturers. Where are they going to go next? You know, it's like whack-a-mole. One country gets hit with tariffs, you try and relocate somewhere else. It's the unpredictability, of course, and the very peculiar nature of these tariffs that the Trump administration has come up with, which makes it so hard for governments and manufacturers to decide what their long-term plans should be now.
OK. Jonathan, thank you very much. Well, let's bring in Mariko Ooi, who is in our Asia Business Hub in Singapore, watching financial markets. So, Mariko, how are they looking today?
Well, Sally, I think it's fair to say that we are back on a roller coaster ride. You and I have been watching the stock market reaction since Thursday last week, ever since Mr. Trump announced those latest tariffs in what the White House calls on Liberation Day. And on Thursday and Friday, we saw that sell-off. And then on Monday, we saw a much bigger sharp sell-off, especially in Japan and Hong Kong. Yesterday, we saw a bit of a recovery, but then once again, we are back in the red. So basically, investors are not liking everything that they're hearing in terms of that escalating tension between the United States and China. As Shaima and Jonathan were talking about it, various Asian governments are in negotiation with Washington, but so far no one has been successful in winning an exemption or getting a deal, and that's why we're seeing this sell-off. Investors and economists have been warning about these tariffs pushing up prices in the United States and possibly pushing the US and even a global economy into a recession, and that fear is getting realistic day by day.
Thank you so much, Mariko, and thank you also to Jonathan Head, Shaima Khalil and Peter Bowes, as well as we get reaction to these tariffs, which have now been in place for nearly 15 minutes on all these countries, 60 countries digesting brand new tariffs. Let's now focus on China. I'm joined by Han Lin, who is China Country Director of the Asia Group. Welcome to BBC News. 104% is the tariffs now on Chinese goods headed to the United States. What's your thoughts on that?
Yeah, these tariffs are quite frustrating for the Chinese government. Not that China feels unprepared, but that the U.S.-China trade situation has unraveled so quickly without a clear off-ramp or a channel of communication besides China capitulating, which is not likely going to happen. But certainly one thing that's being watched as carefully as this is that I remember late last quarter, China had announced that if there was a trade war, China would respond firmly. It has a more diverse and deeper toolkit to retaliate with, and that China has a greater capacity to endure or suffer pain. So it looks like this thesis is about to be challenged over the coming weeks and months. But certainly one thing we do know, which is this: if China can't export its way to GDP growth, it's going to focus more on the domestic economy. And when you look at China's sinking stock market, there's a lot more pressure to accelerate the fiscal and monetary stimulus that's been announced earlier.
But that pivot from being the factory of the world to looking at economic growth fueled by domestic demand is not an easy transition. And actually, it's something China's been trying to do for a few years now, really since the global pandemic. So how will it make that shift? I mean, I'm looking at Goldman Sachs, who's now saying the impact on the Chinese economy could be something like 4.5% this year of a reduction in GDP growth.
That is a challenge China is trying to deal with, because It looks like, at least based on the recent Purchasing Managers Index data for March, the economy looks like it's stabilizing, and that there is still a lot of potential for aggregate demand growth, and that things and stimulus such as cutting rates still have yet to happen. So there are still potential, but that is true. China has stuck to its 5% growth target this year. That was certainly announced during the recent two sessions, and how likely it's going to meet that 5% growth target in a way that people feel safe and comfortable going forward, that is still very much an open question.
Okay, Han Lin from the Asia Group, thank you for giving us your take on the challenges facing China. Well, let's now talk to someone who is glued to the screens, a trader, an investor, Dan Ives, who's the global head of tech research at Wedbush Securities. Dan, how are you doing?
I mean, look, I tell you, 25 years doing this, through dot-com bubble burst, financial crisis, COVID. I think this is probably the scariest days that I've seen in my career.
I must admit, Dan, I'm going to agree with you on that, because I've been working in financial journalism as long as you have. I remember the dot-com bubble bursting at the end of the 90s, as you say, the financial crisis, 2008, COVID. This feels more intense and the gyrations are much more severe. So why is that?
Because you don't know the rules of the game. And ultimately, these are things where when you talk about turning around, once this snowball starts going downhill, you can't stop it. And I believe as these go into effect, a recession's almost guaranteed in the US. And I think it's an economic Armageddon that's self-inflicted. In my opinion, it's the worst policy move out of the White House in 100 years.
So you are not on board then with the president who says, OK, I know this is explosive, I know this is painful, but in the long term, America will be the winner. We are making America great again, America wealthy again. Is that not what will happen?
The opposite. Because, I mean, someone like myself that spent 25 years in and around the supply chain, in Asia, in China, in Taiwan. It's a fictional tale that you're going to make iPhones in the US. And the market is not Republican or Democrat. It knows reality and it knows math. And that's why stocks are selling off. And that's why, look, this is going to go down in history. Unfortunately, it's going to be a dark chapter. And I just believe the pressure is going to continue to mount in DC, on Wall Street. Then negotiations are going to start because this cannot be at this level. It continues to be an absurd situation. And unfortunately, it's consumers that are going to be paying for it.
And Dan, you've been, over the years that I've spoken to you, extremely bullish on Tesla, also Apple as well, which has been the darling of the market and seen as a solid stock. And yet, obviously, Apple is so exposed to all of this. What's your take on those kind of companies that have been massively sold off, and Tesla in particular, and Elon Musk and his role in all of this? Not that he's involved with tariffs specifically, but of course, his alignment with President Trump.
Look, I think no industry is hurt more than these tariffs. I mean, U.S. tech, it could take U.S. tech sector back a decade. At the same point, that for the first time in 30 years, U.S. is ahead of China when it comes to tech, in my opinion, when it comes to AI revolution. Look, I mean, longer term, our bullish stance remains. I mean, we haven't downgraded a stock, but I'll tell you, when it comes to Musk, he has to get out of government. It's actually not a choice at this point. Tesla's become a political symbol. It's been a debacle of epic proportions. And look, clock struck midnight. He needs to leave the U.S. government in terms of his role.